Welcome to the American Dream Planner Quick Training. The focus of this session is to review real property depreciation. To view the information, click to the tabular display, scroll till you see the real property, and then select one of the properties from the sublist, in this case the White House. On the inputs, click for real property, click to edit the White House, and then business use. If the property is not for personal use, from which there is no depreciation, but for business use, click the radio button that says no, and on the output display, let's scroll to the end of the items, and notice that the property basis has been depreciating to zero over we're showing the cumulative depreciation in the final column. To switch back, for personal use, there is no depreciation, the basis remains the same. Notice that land should not and cannot be depreciated, so let's assume that 20% of the property is associated with the land. And now we depreciate to the land value in the column for tax basis of property. There are two depreciation codes. Selecting one or the other will redepreciate over a longer period of time to the value of the land, depending upon if the property is held for primarily non-residential use or not. Depreciation becomes important because if the property is to be sold, in this example I'll show sold in 2020, notice that we have a capital gains of $1 million from which there is no exemption, but if the property is held for personal use, the basis of the property remains $350. We have capital gains and a $500,000 exemption amount because this is a married couple analysis. So the only capital gain associated with the sale is $241,000. If the property, however, is to be depreciated based upon one schedule or the other, the software will recalculate the depreciation recapture, from which more will be subject to capital gains tax. The capital gains tax on all sales is driven off of the tax rates in the general information screen.